This is the Get Better Everyday podcast with Matt Gouget. Actionable advice from real-life superheroes who, just like you, are in relentless pursuit of the best version of themselves. Whether you're just getting started or have been at it for years, my hope is that this podcast injects you with some positive energy to continue doing what brings you joy. Join me as I interview the best of the best in business, sports, and life. Let's grow together. Get Better Everyday podcast with Matt Gouget. I'm excited to have an awesome guest to start off 2023, Brian Vieaux. Thanks for joining us, man. And as we jump into it, maybe just a 1 to 2 minute of who is Brian Vieaux.
Yeah, well, that's a complicated question, but we'll do our best. First of all, thanks for having me. I love the podcast. I love the title is great, right? It covers everything, and that's what we all should be striving to do: is get better every day. But you have some great guests on, and I've learned from each podcast, take a little nugget, here and there. So thanks for doing what you do.
Thanks.
So today I am president and chief operating officer of a company called FinLocker. We're kind of focused in the mortgage vertical. We're not a mortgage tech product, but that's kind of where we live today. But maybe more relative to your audience, I've spent 28 years of my career in mortgage banking. I was living every day in the kind of mortgage production trenches, so to speak. I ran the third-party business for Flagstar Bank before joining this fintech startup, FinLocker. And part of what attracted me to FinLocker was what I saw was an opportunity to really help the industry kind of think about customer engagement and nurturing in a different way. And so it's been 3.5 years. It's been a lot of fun, but it's a startup in every sense of the word. So there's all kinds of learnings that I'm taking every day, and we're trying to get better every day to kind of stay in tune with your title of your podcast.
Right. Yeah. Something I'm learning too from different people in different industries is I think the more worthwhile the endeavor, the harder it is.
Yes.
So anything that you find you're climbing a mountain constantly and it's tough is generally worthwhile, whether that's with your health or raising kids or startup business. And so I really resonate with FinLocker and what you're doing, because in my personal mortgage business, financial education, empowering people through education is something that I really am pushing. And if you talk to most people, there's just not enough financial education out there.
Right.
I probably took it to the extreme when I went into my older son's 3rd grade classroom 5 years ago. I was trying to teach personal finance to a bunch of 8 and 9-year-olds, right? Yeah. I brought him at the mortgage guy piggy banks and tried to talk to him about personal finance. But maybe dig into, because the Get Better Everyday podcast listener, they're trying to get better every day in multiple ways. Some of them, I would imagine, are trying to get better with personal finance and credit, and some of the stuff that you guys have really honed in on and industry leader in. Tell us more about that.
Yeah. So so first of all, I'll kind of rewind the tape a little bit and tell you about the genesis of the company and kind of where it started and where we've gone. So about 7 years ago, the company was launched to solve a pain point in the middle of the loan manufacturing process, the mortgage loan manufacturing process, specifically focusing at that time on helping processors and underwriters sift through asset data, bank statement data, right? So if you think about the way that still 70% of consumers submit their bank data is through paper statements, right? 2 or 3 months of paper statements, and then the processor and underwriter sifts through all those documents. So what FinLocker sought to do was to digitize and automate the analysis part of that process. What the reality of it was that there was 2 main constituents who weren't ready to go there: underwriters, processors, well, 3 actually, and consumers. Underwriters and processors weren't quite ready to say, well, wait, I'm going to let technology do my job. That doesn't seem right. And consumers weren't ready to give up their bank credentials to this third party, this mortgage company. And so what was a great idea just wasn't ready to be embraced in the industry. And so what was created through this idea was this concept of a financial locker, thus FinLocker in the branding. And what the company then did is pivoted to kind of more of a holistic approach to financial fitness using that same set of data to engage a consumer on a financial fitness journey with mortgage readiness as one outcome or objective on the end of that experience. And then use all that curated data to streamline the application process. So just still getting to the same objective, but a different way to get there upstream. And so to me, that progression was an example of a company's mindset of getting better every day.
Right.
And knowing that there was an idea to be had, but also recognizing that the industry wasn't ready to, embrace. And so trying to find another path into that. And that's when the company and the product kind of got my attention from my seat, as a mortgage production manager, where I saw an opportunity for loan officers at any company, frankly, to engage their customer and prospect in a different way and use financial fitness, financial literacy, financial readiness as another way to engage and bring value to that consumer, versus most of the industry for a long time was just transaction mindset, just get through this deal, get to the next deal. And what we kind of help people think about is how to create a longer term of value for that engagement between the professional loan officer and their customer.
Right. Yeah. And I think that we're in a time, going into 2023, some economic turbulence, people that have, had job losses, they've had, their pay cut or their hours cut. There's going to be more of this. And so, I think what you guys are doing is great. And something I think about too, and I'd love to get your thoughts from the inside, as we evolve in every industry, right? There's this balance between, I've heard it said, and I really like this term, high tech, high touch.
Yes.
So somebody wants to use the technology, and I know it as well as anybody else because of the demographic of first-time home buyers, being such a big part of who's buying homes. They're younger than me now, in my 40s now, and so I'm working with these buyers that they want all the technology to help with the process, but they don't want the technology to drive the train and never talk to a human being.
That's right.
And so me and my team are trying to leverage technology, to these clients that are comfortable with it, but then also say, yeah, as a human being, here's what I would do if I was structuring my mortgage, and I do this and that, and then, give some piece of technology where they can use it, manipulate it, and see it in a language that's native to them, because I think, younger generation, technology is their native language,
yes.
And so I'd love to hear from your viewpoint, because you got decades with consumers and technology, how that's evolved and where that is in 2023, maybe even what you see for the future of that.
Yeah. So what I love about what you said is this concept of high tech and high touch. From where I sit and from where we sit as a company and as a product mission, we are not out to disrupt the loan officer in the mortgage kind of ecosystem. We actually believe that our type of technology is best used by a consumer when they're attached to a professional, a financial professional, and that financial professional in this case being a loan officer who's there to offer them that expertise when they need it. As you kind of said, some people are more comfortable, kind of staying in the technology through the entire experience and getting to the finish line by themselves. Most aren't, by the way. Most, especially first-time home buyers, it's the first time they've ever done this. We already kind of riffed on this a little bit. They're consumers today who went through high school and college, haven't been formally trained on financial literacy and responsibility and all the things that go into being a homeowner in this case. And so they still have that need for that expertise, which is what professional loan officers bring to the table, but they have the expectation that there's going to be some technology or digital experience that accompanies that. And that's kind of where we think we line up best with that professional loan officer. We're not a silver bullet, set it and forget it, put this mobile app out into the ether and people will come to it and I'll never have to deal with a customer and I'll just have a magical closing at the end. No, that doesn't exist. And we align ourselves with the folks that have the mindset of, being servant leaders and being very consultative in that process, but using technology to kind of supplement their tool set. So that's kind of the way we think about it. We're not out to disrupt the professional loan officer. We actually think that I'm in the Detroit area. There's, it's kind of mortgage. That's the center of the universe, I guess, for now, for mortgage. A lot of big companies here. Certainly, the number one lender now in the industry, UWM's here, but the number two lender is not too far down the road from them and from me. And so we look at what Quicken does, what Rocket does from a consumer experience technology perspective. And we believe we offer every other lender now in the industry of any size the ability to have that Rocket Money kind of experience, but underneath their own brand and logo, to kind of build and nurture their relationships with financial fitness as the anchor.
Right. Yeah. And I hate to give any airtime to the bad guys, but like I've seen more and more of that Rocket Money.
Yeah.
App, right. How long ago did they launch that?
Well, they bought it. They bought a platform called Truebill. You may have heard of Truebill.
Yeah.
They bought Truebill just over a year ago. It was the tail end of 2021, and then rebranded it Rocket Money this past summer of 2022. And for a little company like FinLocker, a lot of people were reaching out to me and saying, "Oh man, sorry to hear about that." I'm like, no. This is a good thing. This is bringing more awareness to the rest of the industry that this is what consumers are expecting in terms of that technology experience. Rocket, right, wrong, or indifferent, push button, get mortgage. When we all saw that on the Super Bowl, 4 or 5 years ago, that was the proliferation of point of sale systems with Blend and Simple Nexus and Roostify taking off after, Rocket created that marketing spin. And we think they're doing the same now with personal financial fitness.
Right. Yeah. I mean, I think, for a company like FinLocker, it just puts a big spotlight on this is needed. Right. And a company of that size going out and acquiring, what was it? Truebill.
Yep.
is proof that, like, trust me, I know they've got consumer data. I know they've got, the information needed to say, yeah, this is something that the consumers want. So I'd love to, because I know we've talked, some high level stuff and, applications for mortgage originators, but for the end consumer, what would be a 1 minute, 5th grade level, where I could explain this to my soon to be 10-year-old, what exactly FinLocker does?
Yeah. So you mentioned first time home buyers. I like to use them as the example because it's pretty clear in my head anyway, where the value prop is. So the first time home buyer doesn't wake up magically on a Saturday morning, and say, I'm going to go buy a house today. I'm ready. Right. They go through this emotional and financial preparation process. Oftentimes that could be months or longer in duration. And in most cases, they're doing that absent a professional loan officer in their life, because most loan officers are kind of ready at the point of sale. And so what FinLocker is engineered is an experience that provides that early journey home buyer a set of digital tools to help them get themselves financially prepared, which then should lead into a more confident emotional preparedness. And we do that with a series of experiences that sit on the consumer's direct source data. So their credit profile, their financial accounts, and their direct payroll data is all the direct source data that drives the experience. And that experience includes, doing some very preliminary analysis of DTI, credit worthiness, ability to pay and repay, and then packaging it into a user experience, a UI that is enjoyable. It doesn't feel like I'm going through a mortgage application or a process, but that curation that's happening over time, we're actually preparing that person for that day when they're ready to apply. And now they're not scrambling to get all their information together. It's all been pulled together over a series of months or maybe longer. And so what we've done is created that experience, but we allow someone like yourself, Matt, to deliver it early in the journey. So you become that kind of early trusted advisor and provide them this experience. And then you're there for them when they do become ready. So just think of it as a way to extend your coaching and mentorship to first-time home buyers through technology months up the funnel.
Yeah, I really like that too, because, you know, I've said it many times on my YouTube channel, where I'm trying to empower people through education that, you know, whether you buy now, whether you buy 3 months from now or next year or 5 years, you know, the education is what's going to take this big, scary process and make it something that's, you know, enjoyable might be a stretch, right? So,
right.
I've got a few clients like, well, the mortgage process was so much fun. I think it's really the, you know, the emotional part of it's the house, right? But, you know, the financial readiness and all this education around finance, like it's so impactful for people, whether really it's a car purchase, or what their rate is on their credit card, or anything really. And when people are afraid or they don't know, they tend to shy away and just ignore, right? And so I think you guys have done a great job, and hopefully there's originators and other, you know, financial advisors out there pushing on people. Trust me when I tell you this might be a little bit uncomfortable, but, you know, in the vein of get better every day, if a large purchase is in the game plan for you in 2023, and you're thinking about getting better every day, where you start is probably with a product like this, before you even learn about, should I do FHA? Should I do conventional? Should I, you know, put 3.5% down or 5% down? So that's cool, man. I really like the mission and the vision. So what's the future for FinLocker? Just getting it into the hands of more advisors?
Yeah, I mean, today I kind of mentioned it. We live in the mortgage kind of vertical, if you will, but we're not a mortgage technology platform. That happens to be one outcome. So when we kind of think of, you know, the art of the possible for our business, for our product, you know, we really do believe we can help consumers be financially ready for any product or service, and that could be, you know, we happen to start in mortgage, which arguably is the most complicated consumer financial product out there. And so kind of working back downstream to whether it's, you know, student loans or auto loans or personal loans or credit cards or other, you know, insurance products, that's kind of where we can take this thing. I'm excited because, you know, again, I was born and raised in the mortgage industry, more or less, in terms of my professional life. I started right out of college and have been at it since then. So it's really what I know and love. And I actually see the opportunity with, you know, products like FinLocker for lenders and loan officers to expand the value they bring to customers. Not just the value they bring to customers, but potentially have another source of revenue off of those relationships that are, you know, so hard fought to win in the first place. And in most cases, you know, consumers are going to get a mortgage, you know, depending on which expert you believe, it's, you know, once every 5 or 7 years. I happen to think it's a little bit more frequent than that, but that's a long time to go in between, you know, revenue opportunities for the loan industry. And so we think about ways to help the industry, you know, kind of diversify revenue, but at the same time, we're hyper focused on the consumer side of things, and our product is engineered so that the consumer's always in control of their data. You know, they only share with their trusted loan officer when they're ready for the next best, you know, product, service, et cetera. So it's a highly secure, kind of consumer controlled, you know, permission data platform. But we see, you know, an avenue beyond mortgage. I don't know that, you know, people always ask me, especially on the investment side, when are you going to get into the consumer direct business? That's a completely different animal. We've partnered with lenders and originators, again, to not disrupt the business, but to supplement and add to their value. And frankly, they already have the relationship with these consumers. We just want to be a partner for them for that relationship.
Yeah, I totally agree. And, you know, to the point we made earlier, where it's high tech and high touch, like you can't scale with only technology. You've got to have, you know, something this important. And I always liken the mortgage advisor to a financial advisor, except we're on the debt side, and a financial advisor is on the asset side. And, you know, so, you know, arguably we're talking about more personal finance than a financial advisor. They're really talking about, wealth and doing stuff with what you've got, right? And we're talking about how to avoid some bad debt. We're talking about how to structure your finances and all those other things. I had something. This is something that's been in my brain for a long time, so it might not be the right place for it, but I'm going to let it come out of my brain anyway. I thought about putting something out there, and I didn't want to offend anybody or whatnot, but I just had a random thought. And so you're going to be the first one to answer this question that's been living in my brain for 6 months. Would you rather get financial advice from a high-level loan officer or from an entry-level or mediocre financial advisor? And I just thought that if I put that question out there to the universe, somebody who has the title of financial advisor, and there's a bunch of people I look up to in mortgage who do a really good job of financial advising. And I think to myself, somebody would just take financial advisor and loan advisor, mortgage originator, whatever you'd want to call this other person, and just think that like this person knows more about finance, even though this one might have 10x the net worth. This one might have 100x the experience working direct to consumer and advising on finances. So you don't have to answer it, Brian, but I know what my personal answer is, and I think that from what I've seen, the best in the mortgage industry are far from push button get mortgage, right?
Yeah, I actually love what's been kind of growing there in your brain for the last 6 months. And I was about to, before you said something, I was about to say this thing, which I think it resonates. I have one of our customers that their mindset is they are the family office for the everyday homeowner. Meaning there's, I don't know about you, but I don't have a family office that manages my investment, so that's just the elite of the elite, the top 1% that have the ability to have a family office. And this client of ours, that is their mindset, that in their clients' eyes, they already are responsible for managing their largest financial asset, their home, and most likely their largest financial liability, the mortgage. And so that right there, they are the center of that family's kind of financial future. And so they take that very seriously and really aren't there to make a transaction. They're there for the next 30 years of that consumer's financial life, to be there to help them go through not only owning a home, but potentially leveraging the equity to own another home and start to build, family wealth. So I think you are spot on. I would take financial advice from, the upper echelon, top, 20-ish% of the loan professionals that are out there, than from the 80% of the financial advisors that are out there all day long.
Right. Yeah, for sure. So
we both said it. So
yeah, for whatever reason, I've had that living in my head forever. And I think to myself, do I want to say something like that? And it's really a genuine just curiosity at the risk of maybe running off some referral partners that are referring business from their financial office to mine. So I love actionable advice. And so Get Better Everyday podcast, folks listening, if you're thinking about part of your Get Better Every Day in 2023 is your credit or your finances or something like this, what type of actionable advice would you have, Brian? Because I would imagine, you've seen hundreds of thousands of credit profiles and could probably attest to this is something that trips most people up, or here's something that you should be focused on.
Well, I mean, I think that the best advice that I've always have given throughout my 30 plus year career is how do you know where to start if you don't know where you are? And so make sure you have access to your credit report. You can get your credit report, credit score anywhere for free as a consumer. FinLocker is one place you can get it. I guess USafe is the UMortgage version of FinLocker that's out there. So, but find a place where you can get your access to your credit score, your credit report, study your credit report if your score is not high enough. There's tools that are available that you can model changes to your score if you were to take certain actions. So your personal credit should never be a surprise, because it's just all of us have access to it in so many different ways. But I think we'd all be shocked at how few people actually take advantage of understanding their score, not just pulling your credit report one time, but having access to it over a period to understand changes and trends and all that. So that's one thing. And then, on the financial side of things, having the ability know where you are financially today. And so there's, again, all kinds of great, budgeting, spending analysis tools. If you just focused on those two tool sets as a consumer, I think you're that much further ahead when you are ready to sit down with a loan professional who, versus starting from scratch. And so I think to most consumers, I would say, take control to some degree of the process by knowing where you stand today. That would be my advice.
Right. Yeah. And I think that's great advice. And this is something that, going to be the first Get Better Everyday podcast of 2023. And, like you said, take control. And my thing is be intentional. Yes. Whether you want to see a certain number on the scale and you want to be healthy in 2023. A lot of us have done a lot of stuff around business planning. I'm sure people set New Year's resolutions. If your New Year's resolution was, I want to buy a house in 2023, or it might be something different where credit matters, get intentional about it. Yeah. Because I'm human too, right? So I know that if I wasn't doing good with getting to the gym and staying healthy and eating, I wouldn't want to look at the scale, right? And so if you've neglected your credit and your finances and getting that stuff together, it's going to be uncomfortable, yeah. Right? And most things when you're starting and you're going to get better every day, it's going to be uncomfortable at the beginning. But the first step, you look at it, you go, okay, 630. I know what I'm working with. I've got some old derogatory stuff that might just take some time. I know that, if I pay down some debts, that might improve it. And little by little, you're going to make progress and you're going to get better every day.
Yeah.
So
what's cool about USafe, the U-Mortgage version of the FinLocker product, is if I'm a consumer and I, download the app and sign up, and Matt was my sponsoring loan professional, Matt can't see my stuff. So this is my safe place to understand where I am today from a credit and financial, preparedness perspective. And then when I'm comfortable as the consumer to engage Matt's right there in the app for me. But until I consent to share, he's not going to know that I'm at a 630. And so it's just a great kind of safe place for a consumer to kind of, have a sandbox to play with before they're ready to really get in and engage. So it's kudos to the U-Mortgage team for kind of going down this path and making this available to your kind of customers and prospects.
Thanks. Yeah, we love it. We love, empowering consumers through education. I don't know why I'm just full of analogies today, right? But it's like at the beginning of the year, everyone's thinking about the gym. Everyone's thinking about getting healthy. So like as you're talking, I'm thinking about, the analogies to where, if you've let your health suffer, don't be ashamed to get started. If you've let your credit suffer, don't be ashamed to get started. When I see somebody who's got 100 pounds to lose at the gym, they're more inspirational to me than somebody who's only got 10 pounds to lose. And same goes on the credit side. And I'm intimate with that because I've worked as a professional with people. You've gone through divorce. You've had a bankruptcy. You've had a foreclosure. Everybody's gone through something, right? Yeah. And so, don't let that stop you from opening it up and start to work on it. So I think we'll end it there. I really appreciate you, Brian. I'm excited to see what, USafe, FinLocker, what we have in the works for the future, and just helping more consumers, get
that's what it's all about.
Financially fit, you said. So thanks again, Brian. I appreciate you, brother.
Thank you, Matt. Great job.